What is up, people? Miles here with Keep the Change, and today we are looking at Disney stock. We're going to see whether or not it's a buy for 2021, do a little analysis. So if you like the video, make sure to leave a like, really helps the channel out. And if you like stock market videos, make sure to subscribe to the channel. I upload twice a week, so every Tuesday and every Saturday. So yeah, make sure to subscribe, hit that bell, and let's get into it. Disney stock here today is around $180 a share, got a market cap of about $325 billion, and is actually up 40% over the last 3 months. Everybody knows Disney. Whether you're a 5-year-old in Europe or you're a 40-year-old homeless guy in America, you know Disney. I mean, it's super recognizable. They own a ton of brands. They own Marvel, they own Star Wars, Pixar, The Simpsons. They just own a ton of stuff. And the cherry on top to them owning so many brands is the fact that they have streaming services as well. So you got ESPN Plus, you got Hulu, and last but not least, you got Disney Plus. And these streaming services are actually a very big reason that the stock has gone up as much as it has. I mean, it's gone to the moon in the past couple months, and that's because these services have just exceeded expectations. Just for example, look at Disney Plus, which managed to get 10 million people to sign up on its very first day. That is absolutely insane. If you take a look at their expectations for their streaming services, they've absolutely demolished them, absolutely decimated them. With Disney Plus, as of right now, having 86 million monthly users, and they expected to get to that number in 2024. So they're 4 years ahead of the curve here. And same with Hulu and ESPN Plus. They also own Disney Plus Hotstar, which I never heard of before I looked into the company, but it's basically an Indian streaming service. It's only available in India, but it is coming to Europe, and that actually has 8 million subscribers as of right now. And one thing I really like about their streaming services is their pricing. I think it's great, especially when you compare it to its competitors like Netflix and HBO Max. Netflix is around $13.99 a month for a standard subscription. HBO Max is even more than that at $14.99, and Hulu with ads is at $11.99. And a Disney Plus subscription is only going to cost you $6.99 a month, so that is awesome pricing, clearly undercutting their competitors by quite a bit. They also have a package deal, I believe, where you can get Disney Plus, ESPN, and Hulu for around $11.99 or $12.99, I think. So Disney is 100% committed to growing these streaming services, making them as big as possible, expanding the revenue, expanding the subscriber growth. But the one thing they don't have is profitability. They don't expect to make a profit from any of these streaming services until the year 2024, so it is going to be a while. Putting the profits aside for a moment though, I do think that Disney has just such a great advantage in this field, in streaming services, just because of the amount of brands they own, the amount of content they already have. They already have so many movies and so many shows. I mean, you can't compete with them. Now, personally, I do think the Disney Plus app is sort of lacking in content. However, they do have The Mandalorian. People really seem to like that. And it is geared towards kids, so that's something to keep in mind as well. And for Hulu, I know it's kind of an unpopular opinion, but personally, I think Hulu is way better than Netflix. I mean, I go on Netflix and I'm just staring. I'm like, what are these options? These are trash. I go on Hulu, I'm lit, I'm excited. You know what I mean? I'm sure you're sick and tired of hearing about the streaming service. Trust me, I am. The reason I'm talking about it so much though is because Disney actually has come out and said that they're trying to pivot and make themselves a streaming service business. However, as it stands now, it only makes up around a third of their revenue. So let's look at what's actually dragging the business down. For 2020, Disney managed to make $65 billion in revenue, which is down 6% from last year, and last year they made $70 billion. To be completely honest with you, I think the fact that revenue's down 6% is not that bad at all. I would have expected it to be down a lot more considering all that's happened in 2020. The bigger issue for me was how much their profit has shrunk. So in 2019, they made $11 billion in net income, and in 2020, they actually lost $2 billion. This is due to the fact that their higher margin businesses, where they make the bulk of their profits, actually got shut down in 2020 because of the pandemic, and obviously that's going to hurt them a lot. So their cruises got shut down, their parks got shut down, their movies got shut down. You also have to take into consideration the fact that they're going to have to safety proof their parks, so this actually impacts them a lot more than you might think in terms of expenses. So their revenues obviously decreased because the parks weren't open, but they're going to have to spend $1 billion to safe proof the parks for the pandemic. And taking a look into the parks revenue, we can see that they fell 40% year over year from 2019 to 2020, and you can see for their movie segment, the revenues actually fell 13%. As for where the parks are right right now in this moment, it's kind of all over the place. It's a little sporadic. So some of them are closed, some of them are open, but just at, less capacity. And obviously they're not going to be making nearly as much money with half capacity. So on one hand, parks being closed definitely hurts their business dramatically. I mean, it's undeniable. But on the other hand, there's kind of a silver lining. If people aren't outside as much, what are they doing? They're streaming, they're watching things, Disney Plus, Hulu. And for the movie segment of their business, it is kind of a silver lining that theaters are closed because they can just release the movies to Disney Plus or to Hulu. And they actually did this with Mulan. You could pay $30 in order to watch the movie. It does kind of mess up production of movies. You can't really film nearly as much with the pandemic. I mean, it's just impossible. But I am confident that the pandemic should settle down by the end of 2021. I mean, let's pray, let's hope, am I right? And people will be going back to parks, people will be going back to movie theaters, going on cruises, hotel trips, all that good stuff. But if this doesn't happen, Disney will be in some trouble. Mainly because Disney's unprofitable at the moment and they're gonna have to issue debt in order to keep the business running, and they already have a ton of debt, which is a huge problem I have with this company. Looking at the balance sheet, they have around $17 billion in cash, $35 billion in current assets, and only $26 billion in current liabilities, so they can run the business for the next year and still be fine. But just take a look at the amount of debt they have. They have $53 billion in debt. That's ludicrous. That is insanity. So the balance sheet for this company, it's not good. In fact, I would call it bad. It is very, very bad. But let's throw that balance sheet to the side for a second and look at the valuation. So the current P for the company is 51 and the forward P is 88, and that's actually higher than Amazon's forward P, believe it or not. But the story for Disney has changed dramatically over the years. It used to be a value stock. The stock price barely moved at all for years. I remember investing in it at like 90, and like a couple years later it was worth like 110 or something. Kind of a boomer investment. But with the streaming service side of their business, the stock has been priced more like a growth stock in recent times than a value stock. So the company's got a higher valuation because the story changed, right? Now it's a growth stock all of a sudden. It's a streaming service stock. But if you actually believe that, then you've got to compare this to Netflix, okay? And Netflix stock has a forward P of only 57, which actually makes it cheaper than Disney stock. I mean, that's unbelievable. And honestly, Disney stock to me has a lot more risk going for it than Netflix. A lot of their revenue, a lot of their profits comes from parks, comes from cruises, comes from people going to the movies. So people not being able to go do these things has really hurt their business quite a lot, more than they like to admit. They like to just, focus on the fact that they got the streaming service, but they are being hit quite hard. If the pandemic goes away sooner than we expect it to, then I think Disney stock is going to have a huge boost. However, if the pandemic continues and even gets worse, then this is going to be really, really ugly. So me personally, I would wait for a dip to buy Disney stock. I would not buy it at these levels. This isn't financial advice, by the way. Don't get it misconstrued. Don't come sue me. That's not to say that Disney stock isn't going to be higher over the next 10 years. It probably will be. I just think personally, you could probably get it for cheaper prices than this. So those are my thoughts on Disney. Let me know what you guys think down in the comments below. I'll read every comment, reply to everyone. Love the discussion, okay? Thank you guys so much for watching. Means the world to me, and I love you. I don't expect their streaming services to be profitable until the year 2024. So it is going to take a while for them to get a profit. However, this should be a decent amount of money coming in still. That doesn't make sense.